Lloyd, welcome back to the studio.
Great to see you today.
I think we've got a few things to cover. We've got a changing market at the moment in 2025, so I think it would be nice to talk about how we can help some of our listeners buy a property in 2025.
Well, firstly, I guess I've got to say is I had to get up at about 5 o'clock to get here this morning. Pitch dark after I stayed up all night watching the golf.
Yeah.
You know, you say you must have a lot of property to sell today to make me get here this early for this podcast. But anyway, really keen to have a chat and get into it.
Yeah, great. Look, I think with the market the way it is in 2025, I think people do need help out there to try and find that right property. And probably this leads me into my first question. This is something that you do, Lloyd, is should people be using a buyer's agent to help them?
Well, there's obviously some pros and cons to using a buyer's agent. And I think for a lot of people in the changing markets, particularly if they're investors and they're buying away from home, there can be great benefits to that. But I think the first thing we probably need to look at is, what the markets are doing, what we can expect, from this year. And, there's been a lot of touting over the last 12 months about interest rate drops and everything like that. And that's been continuously put on hold. And even the RBA governor, Michelle Bullock, is still a little bit reserved about when that's actually going to occur. And there's always issues about inflation and they're not quite down to their target figures and stuff like that. But I do think that this year we'll see some interest rate drops, if not February, certainly, April, May, around that type of time. And that's going to really put some strength into the markets and really push things along. And that's where people are going to probably need some help from potentially buyers agents because, people want need to invest interstate, probably need to have a strategy on what they need to do, where they need to buy and everything.
Okay, so if they're looking to employ a buyer's agent, what do you think they should be looking for?
Well, I guess the first thing they need to do is find someone who knows the area well that they're looking to buy into. But probably the first thing there is rather than just focusing on that particular location, a lot of people don't really know where they want to buy or why they want to buy.
That's an interesting question. I've worked in real estate a long time and people have come forward and they've spoken to their accountant and they've said, we've got to buy an investment property. But they don't really know why they're buying an investment property. And I think this is a really important point you cover in your books to say, why are you buying this property? What's your end goal?
Well, 100%. So when people come to me, it's not just about going and buying a property. So, for example, if people come to me and they say, I want to go buy a property, for example, in Parramatta, I'd say, why do you want to buy property there? Because for me, it's really about getting to know them, understanding what their long-term goals are, what they're trying to achieve with that property. So, for people, they've got financial goals. Are they trying to achieve some sort of passive income? Do they have a family? Are they looking to put their kids through private schools? Are they looking to be able to fund holidays? There's all sorts of financial reasons that people want to set themselves up and everything like that. And then, of course, looking at their budget. Someone on a $500,000 budget for a property is a lot different to someone who might have more money to spend or less money to spend. So we really need to understand that and what they're trying to achieve. And of course, cash flow is important. You can't just say, okay, this is a great property market to buy and pick a certain suburb because it's anticipated to have growth if you're going to have a really negative cash flow when you might need to be looking at getting a good yield of above 5%, for example. So it's really understanding what people are looking to achieve. Once we've got that in place, then we can look at the best markets to buy in based on the research and the data around those markets, but certainly looking first at what their goals are.
So when you're looking to find a property for the mum and dad investor, are you always looking at major capital cities or you're looking at regional places? Because I think the budget today needs to be so big to get into those major capital cities, it's not always possible.
Well, that's exactly right, Armando. And the thing is that even people that do have larger budgets doesn't mean they necessarily should be buying in capital cities because, again, it comes down to their goals, what sort of yield, cash flow they need on their properties. So certainly buying in regional markets is a very good strategy for a lot of people. I do have a limited amount of regional markets that I'd buy in because they need to have 4 or 5 industries that'll sort of push that growth. So I like sectors around sort of retail, manufacturing, education, healthcare, those sort of things. You'd never want to buy in just one industry kind of town. Like I mentioned in my book, Positively Geared, where I bought in central Queensland, mining town called Blackwater.
Yes.
And, for that one, I bought a cheap property for $250,000. And it was giving about $800 a week in rent. And I thought I was onto something. I thought I'd hit gold, and I thought I was going to do really well there, and did quite well for a while until the mining boom ended. And then all of a sudden, that $800 a week ended up being $190 overnight, essentially, because the mining company moved out, and then the families in town, they can't actually afford the same sort of rent that the mining companies were paying. So you really need to look at a town that's really propped up by a lot of sectors. So even if you're buying regionally, you've got to have a lot of those.
Well, it comes down to supply and demand too. Once all the mining people left, I suppose the demand was no longer there, and there was ample properties on the market for people to rent, and the price was coming down.
Yeah, absolutely.
Yeah.
And getting back to your question there, so we can buy in regional centres with the long-term goal of maybe getting into those capital cities, but starting with the regional centres that have better cash flow that will help them get into the capital cities later on. So there's a strategy behind that as well.
So a good buyer's agent would look at these things, and you want to ask those questions and say, well, why are you recommending this property to me if I'm looking to invest and it's not in a major city, and they're looking at regional? You as the buyer's agent, they'd be given the answer to those questions, so you don't end up with a Blackwater property.
Yeah, absolutely. You really need to ask your buyer's agent that question, and they need to sort of be giving you a good understanding around strategy. So it's not just about buying the property. Like a good buyer's agent should be able to find you a good property, but if you've got the time yourself, then you should be able to often find a good property yourself anyway. But it's more to it than that. It's about whether that property actually fits your goals, and that's where a lot of people do often need that help and things.
I think the goals is a big thing. Saying why are you getting this property, and what's the long-term future, and what are you going to do with it in 5 years' time?
Yeah, absolutely. Because like when I invest, I always look at that property and firstly look at how that's going to help me get into my next property, because you don't want to be part of the 90% of Australian investors who never get past one property. So you need to make sure that you're buying property that can help you move forward. An example of that is someone who spends all of their budget on one property. You might have $1 million budget and you spend all of that on one property, but you've got a really low yield. You bring in $600 a week in rent, you're completely maxed out, and then you've got no serviceability left for your next purchase.
I've seen that statistic that they only have 90% of investors only have one property, and it slowly drops as it gets 2, 3 or 4. Why do you think they stop at the one?
Well, basically one of the reasons. So you're either buying the wrong property or you've got the wrong financial structure in place. So the wrong property could be like the wrong property for your strategy might be just completely maxing you out, or it might be it could be a house and land package or off the plan apartment that's sort of tied up all your funds. It just might be something it could be something in Blackwater that just hasn't performed well for you, and you don't have the equity to move forward. Because remember, for a lot of people, you don't always have a deposit saved up for each purchase. So you need to look at how you can get into the next property. That might be through getting equity from your first property. Now, getting equity through organic growth is important. So getting capital growth in that first property, so that you can get into your next property helps. For some people, a strategy around creating equity such as renovation.
You talk about this in the book, how you sort of want to try and add value to the property, so that gives you then equity for the next property.
Yeah, adding value is one thing, but just leaving that out for a sec, it's just like if you're buying property in the wrong location, it's just not going to get any growth, and that can stop you from moving forward as well. So you're buying that right property. Yeah,
we talked about this off air as well, to say, are you buying a property on a main road or a suburb? You really got to start looking at all those little bits and pieces.
Yeah, 100%. And I think the thing about that is it comes back to getting something that what I call an investment grade property. So an investment grade property is a property that is essentially a property that I feel will outperform the averages of other properties within that suburb. Because when you look at the micro elements in a suburb, there are some streets and some properties that will outperform other properties in that same suburb. So examples of that, if you're buying in a nice quiet street, nice quiet leafy street, a property that's got a good floor space ratio, so you've got a good block size and the house doesn't take up too much of the block, good floor plans, you're in the catchment zone of some really good schools, you're close to hospitals, things like that, that type of property is going to perform better than a property that might be on a really busy road opposite a roundabout, or there's a truck stop across the road and things like that. So that's important. One of the things I'd like to look at when I'm buying property is to look at the property and think, is that property going to sell when the market slows down? Because you probably know as a real estate agent that when the market's hot, any property will sell itself. So you could probably stay in bed on Monday and all your properties will just sell themselves and you'll wake up and you'll have a big fat paycheck in your bank. Maybe that doesn't happen. But
No, it doesn't really happen like that. But I understand your concept to say, the ones that are in good locations always seem to sell. There's always a buyer for a property in a good location.
And that's the thing. When the market slows down, then it's those properties that are not well located, where people really don't want to buy, don't want to live if they don't happen, where they have more choice. So if you're choosing between a property on a busy road and a property on a nice quiet street, and there's not that many buyers around, there's lots of choice, then those properties that are not well located aren't going to sell so well. So you want to think about the end buyer, think about how your property is going to sell in the future. It's also like another statistic that I like to look at when I'm researching property is the owner-occupied to rented ratio. So about 80% owner-occupied to 20% rented.
And how do you find out those figures? So for the people out there looking to find that figure, how would they find it?
So they can actually be found online using various software, and you can find them on free websites, such as realestate.com and stuff like that. So that again is something that people can research themselves as well. But that's also something that buyers agents will obviously supply you with to make sure you're getting the right sort of asset there. Because what I feel when you're getting something with that sort of ratio is that if you're buying in an owner-occupied type area, then those type of properties have been looked after well. They've got house-proud people. You
get good street appeal too.
Yeah,
because generally your neighbours' homes look quite nice as well, and it makes the suburb look a little bit
100%,
nicer.
and it really pushes the growth. So although you're bought as an investment property, you want to try to sell it with an owner-occupier in mind. People will be more emotional about the purchase, and you should make more money on the other end.
And you've got two streams of buyers as well. You're not only just selling to an investor, you're selling to a home occupier as well. If that home occupier is emotionally involved in that property, they're more likely to spend a little bit more as well.
Yeah, absolutely.
Which maximises your return if you've bought that for investment and now reselling it.
Yeah.
Yeah, so I think that is important that you look at those figures. And a good buyer's agent should do that for you. And they should present to you, I suppose, more than just one possible option to buy.
Yeah, absolutely. So I think what a buyer's agent should really be doing is looking at multiple properties. Should only be presenting you properties that really do meet your brief, because there's nothing more annoying than being presented properties that aren't what you spoke to the buyer's agent about.
Yeah.
So really something that meets your brief is important. But also, look, when I'm searching property, we might look at 10 or 15 properties before we even present any properties to the client. So it's really about crossing off things. So when we're going through different levels of checks, like we might check, make sure it's not in a flood zone, it's not in a bushfire zone, not under a flight path, all that. But then when we look at the yield doesn't quite meet the client's requirements, then we won't send that property to them, unless everything else in the property is, up to scratch. And then we
can offer them less too, like we've done in other podcasts. You can say, well, the yield's not there, but let's offer them less and see what they say.
Well, that's the thing, but that's a conversation then basically have with the client.
So once you've got your list of properties that you want to show your client, do you generally then go with them to look at those properties? You sent them the list, they've probably said, yes, I like these three. Do you go with them to have a look at the homes?
Yeah, so that's an interesting question, because as a buyer's agent, we buy primary residence properties and investment properties. Now, with primary residence properties, we take our clients to those properties, and quite often we'll drive them around to the homes and stuff. For investments, most of the time, the clients won't actually go and look at the properties because they're usually interstate. They're usually not close to where the client's actually living. So we'll inspect the properties, but not necessarily the client.
Right.
So we'll inspect. We might put the client on a FaceTime call or a WhatsApp call and sort of show them through the property virtually, or send them a video of the inspection or something like that. But of course, if the client wants to jump on a plane and come and look at the property, then they can do that as well. There's a few variables there, because when we're looking at a property and we might need to move fairly quickly depending on what the market's doing, we might need to put an offer on the property before the client's actually seen it. But that all comes down to making sure we're putting in an offer with terms that protect the client. So as a couple of examples, if you're buying in New South Wales, you put in a cooling off period, which standard is 5 days, but we'd sort of extend that to 10 days, which allows you to get your finance in place, get your building and pest inspection checks done, because usually when we're buying an investment property, we don't buy at auction, so we don't need to worry about having to sort of go unconditional straight away. So you've got that. Other states, such as Queensland, you've actually got clauses in the contract that are good for the buyer. So you have sort of a mandatory 14-day finance clause and a building and pest clause. So you can actually sign the contract, and then you've got all this time after you've signed the contract to finish all that due diligence in the contract, including inspection.
Do you see those changes possibly coming to New South Wales?
It would be good if they did, because a lot of the times the New South Wales contracts are dragged out a little bit, and I think I think the way things are done in Queensland is quite good. It does put a bit of pressure under buyers to sign, but once buyers understand how it works, it actually works quite well, because you can sign a contract there, but then you're actually protected by those clauses, and there's plenty of things to get done there. But in New South Wales, it can drag things out, then there's a possibility you can get gazumped, and there's a few things there. So don't know whether I can see that coming to New South Wales, but it would be good if that changed at some stage, yeah.
And probably for a lot of people maybe looking in New South Wales, a lot of properties do go to auction, so can't always secure a sale before auction. Are you there on auction day?
Always, yeah. So if we're bidding at auction, we'll always be there. Client will usually be there. Sometimes, depending on if they're nervous, they might be standing.
People are nervous during auctions.
So they might be standing next to us, and obviously be doing all the bidding and stuff. Sometimes they might be just standing up the back, away from us. Sometimes they're not there, which means they obviously need to give us an authority to bid, and maybe the agent to sign.
For and
on their behalf and things like that, if they're like overseas or interstate. But we always have a strategy in place. Now, a bidding strategy is going to be different for every person and every property, but we always discuss that beforehand. What is your maximum? What's going to happen if this happens and things like that. So that, I absolutely love auctions because it's a very transparent way of buying. Because no matter how well you think you know an agent or the market, when you're placing in an offer on a property and then the agent comes back and says, oh, there's another offer being placed, you never 100% know how true that is, or what and you can never really know what the other offer is, because they're not really allowed to tell you. But with auctions, you know exactly what's going on, because everyone's there.
Yep, they're in front of you.
They're right there.
And what do you do with the agents when they come around and they're tugging on your shoulder, they're saying, Lloyd, I think we just need another $1,000 from you? Well, do you normally shoo them away, or do you just
that's the thing. I completely ignore them, because that's the thing I was about to say, is that I put on complete poker face. And I have never played a game of poker in my life, but on auction day, poker face. And if I've got some annoying agent who's just tagging my shoulder, I don't even acknowledge them, because I'm just looking at the auctioneer, just doing my thing. So they can tag on everyone else's shoulder, but I know what I need to do. And the thing is, you do need to play a few mind games there, and you need to it's all about perception, but give people the perception that you have an unlimited budget. Now, an unlimited budget might be only $1,000 more than what my last bid was, but nobody else needs to know that, because you never know where everyone else's budget is. So, you just keep going until you get to your max, but never let anyone else know where your max is. Because I've been to a number of auctions where people are there, particularly first home buyers, and they might have their parents there, and the parents are saying, oh, you can go a little bit higher, I'll give you an extra $5,000. And they're actually having those conversations there.
They are.
Well, I know exactly their situation then. My client might only have an extra $10,000, available.
You know they're on their limit.
But I know that those guys are on the limit. And I know that we've got a little bit more, but I know that if we went to that extra $10,000, that my client actually has an extra 2 or 3 above that as well, because we've talked about that. So it's just those little strategies that help us get things over the line. Doesn't always work. So sometimes you do have people with big pockets who will just outbid you, and sometimes the market does get carried away. But it's just about being prepared and also managing people's expectations around that. Yeah.
Oh, look, I've bid on behalf of other people at auction as well to help them, and my main instructions is, can you not say anything? Don't shake your head. Don't have that expression like, oh my God, they're paying too much for it, I'm not going to get it. We just got to really just be silent, have our number in our head, and keep bidding.
Yeah, it's all about having that conversation beforehand.
Absolutely.
To make sure that people understand. It might have a price guide of 1.2, and we manage that expectation, say, well, this property, based on comparables, based on what auctions are doing, will probably sell for 1.4, 1.45. So our number's going to be this, and this is what we're going to be up to. But don't be halfway through the auction saying, oh, we can't go up to that, because that's not, we've got to be clear on this is our number, and we go up to that, we won't go any higher, or we might get up to a certain number and then have a conversation, a quiet conversation. Yeah, none of this panicking, like, oh no, what's going to happen, and all this sort of thing. So,
yeah, you don't want that going on. Oh, look, we rely on that as agents. We can see it across the crowd. We can see the mum and dad speaking into the young couples here saying, I'll give you another $5,000 or $1,000 for the next bid. And that actually gives confidence to the underbidder, because they're going, oh, we're on their limit. We're really close to owning this property. The keys are in the door. So it does push up the price.
Yeah,
so I think having your buyer's agents there, having a discussion before the auction of what your limits are, I think is a really important strategy.
Yeah, and I think buyer's agents can offer some good value at auction, because I guess, talking about using buyer's agents, and obviously there's pros and cons for that, and so, some of the disadvantages of maybe using buyer's agent is there is a cost to that, and I'd hope that when you're using buyer's agent, that you're getting very good value for money, which is getting back to our previous discussion about, a buyer's agent should really be providing you with a sort of an unlimited amount of properties to make sure that you're happy before you move forward. So you're getting really good value and understanding strategy. That's all really important. For some people, like especially if they're buying their own home, they might have found a property that they like. They may not have necessarily used a buyer's agent to pay that full buyer's agent fee, but then they might be too scared to bid at auction. So the fee for bidding at auction is less than a full buyer's agent service fee. So that can add some good value too. So, sometimes people will call us up and say, can you bid for us on Saturday at an auction? So that's a good sort of
And
value
do you think it sort of takes a bit of the emotion out of it as well, and they sort of stick to their budget a little bit better, not pay too much for that property?
It should. It definitely should. And I think that's every step of the way. Like whether you're using buyer's agent for an auction or for the full service or anything, it should be taking the emotion out of it, because we're not emotionally attached to any property we're buying. Because for me, when I'm buying, and this is a funny thing to say, but when I'm helping a client buy a property, I'm actually not fussed whether the client gets that property or not, because we can just get the client another property. We can find that property that really suits the client. But for me, it's really about, does this suit the client's brief? If it's for a primary residence, is this what they're looking for? Are they happy? Or if it's an investment, do the numbers work out? Is the location right? Is this going to fit their strategy? And if the answer is yes, then we're happy to proceed with this property. I don't love property. I don't love that property for them, and that's a funny thing to say in a sense. But for me, I love property as a vehicle to get you somewhere. But we miss out on more properties than we actually buy, because we always have a number that we'll go up to. Even when we buy properties off market, we get a lot of properties off market from our agent contacts.
That was my next question.
There's a bit of a misconception that if you use a buyer's agent, you're going to get heaps of properties off market. You should with a lot of buyer's agents. However, they're not always the cheapest properties. If you get properties off market and the agents are trying to get you can get it really cheap, then it's not necessarily the best asset, because often off market properties, particularly when the market's strong, the vendors are sort of testing the market and trying to get sort of a good value on their property, seeing what they can get for it. Otherwise, they'll take it to market. So it does come down to sort of understanding that. Negotiation techniques. Often we do get properties below some of the other offers on a property because we've offered better terms. So it's not just about price, it's about understanding why the vendor is selling. Now, if they want a longer settlement, we'll find out and say, the vendor actually wants a 90-day settlement, and they'll actually be happy with this price if your client doesn't need to settle for 3 months. Now, they're an investor, but it doesn't matter. You don't need to pay a mortgage for 3 months. So if the client's happy with that, then we look at those sort of things as well to try to get the right outcome with that. But it's really important to sort of understand that a good asset in a good location is going to be worth value and should get good growth. If you are looking at the really cheapest assets, trying to buy the cheapest property all the time, there's probably a reason why it's cheap as well. So for me, it's really about educating people as well, and it's obviously one of the things I try to do with the content I put out there. It's why I wrote my books. Essentially, is to try to educate people on what to look for in property, and for them to understand the pros and cons of what's out there and everything.
And do you find, being a buyer's agent, you get contacted by more real estate agents with off-market sales?
We do, yeah, absolutely. We do get a lot. It's funny how we probably get stuff every day, but a lot of that doesn't suit our clients and stuff, so we'll dismiss that straight away. And quite often we'll send a brief to a real estate agent, and they'll send us back something that doesn't suit what we've asked for, so we'll dismiss that. So that's a bit annoying. So with some real estate agents, it works really well. Others, they don't quite understand and things like that as well. So so it just depends, but it's all part of the deal. I mean, some of the properties we go for are not on market at all, which basically means there's off market and then there's truly off market. So truly off market is something that might be not even an agent knows about it, but we like the look of a particular property. There's nothing else for sale in that street, but our client wants to live in that particular street. So we might go door knocking and see if anyone wants to sell the property in that street. That has worked on occasion, but you're not going to get a good deal doing that, because if someone really wants to live there, then you've got to convince someone to sell their house. You're not going to then get it.
But they live in the house in the street they want now.
That's right. But you're not going to get that, and for a bargain as well. So people need to kind of understand that.
And how did you find door knock in the street? For the first time anyway, when you did that, how did that go?
A little bit nerve-wracking. I mean, I think the first time I did it was probably a letterbox drop.
Yeah.
I was probably too scared the first time I did it to actually literally door knock. But there's other ways to do that. When we say door knocking, and that also means contacting people throughout, because we've got software that we use such as RP Data, and it's got phone numbers of houses in the street. As long as it's not on the do not call register, we're not going to call that register. So we know who we can call and who we can't call and things like that. So we've got ways of finding people's contact details and stuff.
All right. So in 2025, obviously the market's moving again with interest rates. And do you think now's the time for people to start looking for a property before that interest rate cut comes?
Well, yeah, I mean, that's always an interesting question around whether you should be looking for a property now or not. But
that's another book, but yeah.
Yeah, well, that's right. But because I think for me, there's always a good opportunity and always a good time to buy, no matter what the markets are doing. I do think that the markets will start moving once interest rates start coming down, because they generally do. I think there is a window of opportunity for people to to get in now and probably get some good opportunities in the next 2 to 3 months, because then we'll start to see the markets sort of take off. But even with interest rates being high, we've seen some really bullish markets. We've seen Perth be very strong. We've seen parts of Queensland be exceptionally strong, and there's still more to come there. There's a lot of growth there. I think for years to come with the infrastructure that's going in there, with the population growth, with the Olympics coming and stuff. Yet we've seen Melbourne be really flat because of what the government's done with their tax laws and stuff like that. However, I think there's growth to come in Melbourne, so we're keeping an eye on the Melbourne market. We're spending a lot of
So just to recap on that Melbourne market for our Melbourne listeners, what has the government done down there to sort of stall the market?
Well, the main thing they've done there really is they've reduced the land tax threshold, which was 300,000, which is pretty low anyway. They've reduced it down to 50,000. Now, what that essentially means, so if I compare it Victoria to another state, if you look at buying in Melbourne, you start paying land tax after $50,000 of land value, which is basically straight away.
Yeah.
If you go to Queensland, the land tax threshold is $1,040,000. So you can essentially own multiple properties in Queensland, depending on where they are, and not pay land tax. So it's going to be more inviting to own property in Queensland than what it is in Melbourne. So everyone got nervous. Everyone was trying to sell their properties in Melbourne, but no one wanted to buy them. So the market became really flat. Now, there's a strong possibility that the government down there will change hands later in the year. Those laws may be overturned, but it's a bit of a gamble. However, at some stage, I think there's going to be some really solid growth come back to Melbourne, because historically it's been the second highest growth market in the country behind Sydney. It's now sitting at number 6.
Oh, wow.
So it's been overtaken by Brisbane, Perth, Adelaide and Canberra.
And that would be pushing rental prices up too, though.
Yeah.
So the yield will be a little bit higher.
It is.
Yeah, but they eventually got to look at that, the government, to say, well, we need more rental properties.
That's correct. And the yield is stronger there, because yield has always been the second lowest in the country as well. So Sydney's traditionally had the lowest yield, and Melbourne's had the second lowest yield. And generally, you'd be lucky to get anything above about 3.3. In fact, about 3.3 was the average rental yield in Melbourne. That's been pushed up a bit. You're probably getting close to about 3.8. Across Greater Melbourne at the moment. So, and that obviously varies almost weekly based on what the property prices are doing. But it is having a little bit of effect around that. Yep.
All right. And look, there's a lot of that that's covered in your book as well, isn't there? So it's definitely worth a read for people looking for a buyer's agent, getting into the market. I think they should definitely be getting a copy of your book and having a read through it, because I think it does answer a lot of questions and give them a lot of ideas and scope of where they need to go.
Yeah, well, I mean, I think the main reason I wrote my book was not really as a marketing tool or anything like that, or to talk about buyer's agent services, but it was really as an education platform. And we do talk a lot about the different strategies that you can use as a buyer, and that you can start with a lower deposit. You don't need millions of dollars to get into property. You don't have to buy in Sydney to start with. So looking at why you want to buy, the why is a big factor, and then where you need to buy, and then how you can actually progress past one property is really important. So looking at that. But with my new updated version, which was released in January this year, I cover off a lot of different markets as well, because as well as my general case studies on on what some of my clients and myself have done, I also talk about the various markets. So I do talk about these different states, what's happening in the different states, what's happening in Victoria, what's happening in Perth, things like that, and a bit of an update there, because
I think your case studies are really important, because I think people normally relate to stories, and you've actually got real people's stories in that book. You go through the numbers, you go through their situation, why they're buying a property, and how it all went. And it breaks it down, and you've got the facts and figures there. And I think it's really good for people to read and see that and say, okay, well, John and Mary are like us. They've got a similar story, and that's what they did. Okay, we can sort of do the same thing. And then it sort of leads them back into read the rest of the book to say, okay, well, how did John and Mary get to this spot? And I think that's really important. Yeah.
Yeah, absolutely. Yeah. Those figures are really important, and it's good for people to understand how they can get there, and they're the same sort of, like, these actual clients similar to anybody that might be listening to this essentially. So it's quite relatable for people, which I think is quite important. Like the locations, when we start talking about Brisbane in my latest version of Positively Geared, because there's a lot happening there, and how the Olympics is going to affect Brisbane. So that's just interesting reading. So people are looking at the Brisbane market, and there's a lot of a lot of information out there, and lots of who do you listen to, and is a really good place to invest in, or where in business should you invest, and why should you invest there. So I cover those sort of things, and obviously talk about what's happening in Perth now, what's happening in Melbourne, because we sort of used to speak about Perth, and because Perth has had a lot of growth in recent years, but it does have its ebbs and flows. For example, in the decade from 2010 to 2020, it had negative 13% growth, while all of the eastern states had positive growth. But it's had a huge amount of growth the last couple of years. But looking at how Perth is actually affected by the resources and the potential of that, and how that might be affected moving forward, is something that I cover off too. So it's just kind of interesting reading, just for the sake of, educating people and everything like that.
All right, Lloyd, it's time for that part of our show. So we've
That
got
part of- what
that
part
part
of
of the
our
show.
show?
We've got Ed's deal coming up. Remember, we had
I love
Ed
Ed's
Cavalier
deals.
that he came in and gave us an idea, and we've run with it now. So I've got 3 deals to put to you, and you got to tell me if they're a good deal or bad deal.
Okay, sounds
All
good.
right, so let's get started. All right, so the first one I got up is 605 Wilson Street, Ballarat East. It's on the market for $650,000 to $690,000. It's 1,887 square metres, so it's a good sized block of land. Had a look at what it would rent for down there. It would probably rent for $320 a week. At that return and that price, the yield is 2.5%, but maybe you can see how to increase that yield, because you do talk about in your book of added value. That's our first one.
That is a horrible yield.
It is a horrible yield.
So that's the first thing I'll say about that.
Yeah.
What I would say about that is that market would certainly have that potential, and that block would have that potential to do a subdivision on. So I'd really need to look at some numbers there around what I could fit on that block, and then look at how much it would cost to build, maybe some duplexes or townhouses, to see what sort of margin I can make out of that.
I think in that one they talk about subject to SDA. Just look with the bit that I've highlighted. I think they've got an idea of what they could possibly build on it.
Yeah, but that's coming from a real estate agent.
You can trust real estate agents.
Oh,
Right?
of course.
You can trust
Sorry,
real estate
I should have
agents.
realised. Yeah. So I think with that, that really depends on what people are trying to achieve. It's potentially a good development site, but not. Like, being in the regional area, if someone's looking for something with a bit of cash flow, and they're looking to develop, I wouldn't be going for that one, because the cash flow is way too low to sustain it at this stage. So there's probably better opportunities around than that one.
Okay, all right. And will we look at the land size and go, oh, there's a lot of land?
There is a lot of land, but there's a lot of land around Ballarat in general as well. So that's also a thing that might hurt some of that long-term growth as well. Yeah.
So as an investor, we're coming from Sydney, we go, oh wow, that's a huge block of land. But when you go to Ballarat, there you might go, oh, that's not that big.
Well, yeah, that's right. But I guess the main thing is it is fit for subdivision. So it's value-add opportunities. And that's what I like to do, and that's something that I...
It sounds like you're sitting on the fence on this one, Lloyd.
So it's okay. And Ballarat itself has had growth. It has been a pretty good market over the years.
All right, I've got another one for you. This one is in 4 Toronto Avenue, Dapto, so not too far from Sydney, probably about an hour's away. On the market, 3-bedroom home, 5-car, it's got a garage with it with 5-car for parking, 633 square metres. Again, I had a look at the rental yield, probably looking around $620 a week, which works out to be about 4% return. So our return is definitely up on that one. What do you think?
So that's quite a good area. Growth is good there. I really think that some of the people that live in the street where I live in should be moving there, because there's a lot of people around that have 5 cars and they have 2-car garages. So, but if we've got something that has a 5-car garage, then that's a bit of an added bonus.
I'll let you keep that, and you can do a bit of a door knock with your neighbours.
I'll do a door knock. I'll stick that in everyone's. I'll copy it.
And just say, look, and they might be interested. The yield's reasonably good for a property that close to Sydney, I thought.
That's a potentially a good deal. I'm not sure what's going on inside the house, but it could be a reno opportunity as well.
And add a bit of value?
Add some value.
So that's a maybe.
Growth and add value opportunity.
Okay, all right. Our last one on the list is number 11, Whitehead Close, Carry On, New South Wales. 4-bedroom home, looks nicely renovated. Price guide is $900 to $950. 2-car garage, so don't refer this to your neighbours because there's not enough parking. 4% return, $700 a week. I thought that was sort of interesting because one's Dapto is sort of an hour away from... They're sort of both an hour away from Sydney, in opposite directions.
Need to get rid of those trees. Those trees that fall all over the lawn. I've lived with those kind of palm
you got all those balls
before.
you're going to slip over on.
That area itself is, again, a pretty good growth area, quite close to Sydney. With that, reasonably on the expensive side, depending on the strategy. So whether it's a good deal, bad deal, depends on what you're trying to achieve. Mm-hmm. So as an investor, I'd be sort of considering that. If you've got only a budget of $1 million, I probably wouldn't be really looking at that, because I think you could probably get yourself a better investment in probably a capital city, either the Brisbane, Melbourne or Adelaide market, really. So different strategy if you're buying your own home. So that is probably something that I'd probably leave as an investor, and I think there's probably better opportunities.
So out of the three, it looks like we're probably leaning towards Dapto.
I'd do the Dapto one.
Yeah, close to Sydney as well. Looks like a nice home.
Yeah, that one. I think that's got potential. It's got good growth there. So
I like the size of the land too. 633 squares. Yep. Possibly could put something in the backyard as a granny flat for added value in return.
Potentially, need to look at the access handle there, and the council requirements to see how wide the access handle needs to be. So a lot of DD, a lot of due diligence needs to be done.
Oh, and that leaves me last question. Then last question for the day. As a buyer's agent, would you recommend that as well, to say, oh look, this might be a good opportunity to add some value? Is that sort of what you do?
Well, that is one of the strategies we'd obviously talk about. That's probably going to be one of the strategies initially, though. This is like, how are we going to get into the next property? How are we going to raise like a deposit for the next property? Are we going to take equity out of the property? If you're looking to buy your next property in the next 6 months, you probably won't get enough growth in the market to be able to do that. So let's try to get a property that you can actually renovate, maybe just cosmetically to start with. So some paintings, some window coverings, floor coverings, kitchen upgrades, and maybe some landscaping. Yeah, subject to serviceability, refinance some equity out of that, use that to get into your next purchase. So that's a strategy within itself, and that's what would make particularly that one in Dapto a particularly good deal for someone who's can get in, and it's sort of it'll help with your cash flow, and make the yield more attractive as well.
Okay, thank you, Lloyd, and thank you for coming in the studio again today, and we look forward to meeting up soon.
It's been a hoot.
Thank you.